Premium area. Welcome, YouTube snipers. It's the crypto sniper talking out of the crypto sniper hat. Yep, it was a bit lucky for us today. The Ethereum trade has triggered. Yeah, this is a small micro 5-minute that I did, but we were watching this really, really closely on the macro level. So we're inside our premium area. The whole structure of this is a major upside HVF that was experienced on the bull market blow up high. And when we traded through this low, I remember telling everybody this is a real pivotal moment when we traded through that red line. And I'd suspected that we were going to run this low as well. This was not bottoming. This had a grind line under it as well. And as a result, we were on the wrong side of this funnel on the big bull move. And that's like sticky mud. If you break that, that's still a sign of bearishness, and it's an invalidation of the optimism way down at those levels there for this time frame. So according to HVF method, you remain bearish on the daily time frame, especially if you're taking out upside funnels to the low side. The other aspect that we'll come back to on Ethereum, but the other aspect is what Bitcoin had been making grinding upside targets. They were late. They were being made late. They were finishing with very small little fractals that gave small boosters. Small little boost target that was just made, and then you have a sitting here, very low vol with an ascending move, and that was your first inverted in a new trend. So we'd been, guys, don't be chasing the Bitcoin bleed up message. We haven't got everything right for August, that's for sure. So far be it from me to represent it as such, but this was just not a comfy period, a high belief period for this move. It came out of a rising wedge here, as you can see, bled out, but it made its target, but it kept going slightly up. We're saying it's not convincing at the bigger time frame. So if we just swing out on BTC, we had a confluence of targets that are made. They're all created, in essence, a rising wedge structure like that. So you had another very steeply ascending rising wedge, more so than the next one. And one of them is going to give you a slap in the face event. And that's exactly what happened. BTC got its slap in the face. And the one that's more vulnerable to me is Ethereum. And if we take a look at Ethereum BTC, so this is part of what you'll learn if you come on a program, is that we do assessment across all charts. Volume by price, 70% of the trade is actually trading in this zone. So sub 0.07. So those giddy heights of 15, everything 8, 9, 10, 11, 12, no, not on any great volume. The volume was down here in this overall move. And this was, once again, a key pivotal point for Ethereum that told me Ethereum is weak, and it's become one of my favorite shorts. Why? Because it's liquid. It's the second biggest coin. And B, because it runs structural levels. It should never have done this. Grinding, squeeze, break, makes target. Another grind, squeeze, break, makes target. Down, down, down. Even a little fractal there, if I drop down the time frame and I was watching this, I was saying, this baby's got no power. It's balked at running it first time. That's the best it can do. It's going to roll and break this, and it has. And now it's actually turned over and rolled. It's spilling relative to BTC even stronger. And remember, BTC's just had a huge smackdown right now. So Ethereum is showing you it's a liquid and weak coin relative to Bitcoin. So there's, suspicion is, gents, hear me now, this structural point will be run too. In other words, there's more to come with this bearishness environment for the crypto realm. The major alts not doing well. I also did an alts versus a market cap, and this is really useful. I said this grind line will break. There's the key moment. The grind line broke literally in the last hour as I was trading Ethereum short. So very lucky, a good day after not such a great month, because it had been weak grinding and I couldn't believe what it was doing. I got in once before a little earlier here when we had a fractal and it failed. So once again, we get things wrong, but this is a key moment. There's always a final twist of the knife. This is a real capitulation. Targets were made to the downside on this head and shoulders. This is altcoin, excluding Bitcoin. This grind line here, not confident of it. By the way, there's a funnel there of that same kind of variety that you got in the upside of Ethereum. Ethereum made up part of this DNA, but others were setting up too for that huge pump and being accumulated. others were being set up too. So this was a major accumulation period before the big move up for all altcoins. I'm assessing that this funnel will be run. That will be very bearish if that occurs. If we bottom just before it, that will be a good thing. It could serve as support if not run. In other words, we could trade into it, but not through it. But Ethereum has traded through its version of this, guys. Ethereum has traded through its version of this. That is the second biggest coin and the major of the alts. So what else have you got here? Here was the rising wedge on BTC that we said, guys, this is going to trade down. This is not bottoming. This was covered in our premium area. And I think I might even have done something preview warning on the market cap on this. So downside here. Yes, we've made that target of that big head and shoulders left. This is HVF method head and shoulders. You need to learn that. Come on a program to find out how. It makes a massive difference to learn stuff. Guys will blow up accounts and take 10, 15 grand, 30 grand losses 2, 3, 4 times. But they'll say, no, 10 grand is too much to consider for a program and to understand or be part of a community. That I would say that. And you can take it or leave it. But I am so glad that I have method and community. That is a break, and I would say for me that's going to be capitulative to the downside, and that you're going to run that low as well. Did BTC of its own accord have that same upside HVF? We need to rescale a little bit. It was strong, and it had a slightly ugly version, which looked something like that. Ascending structure. So that is quite some way away, but we should draw this period because my suspicion is this could become a critical level. The bear is not confirmed over, guys. Look at this. Look at this total market cap. There's scope for that to run a new all-time low. That doesn't mean Bitcoin has to be the one that runs low, but that means a lot of shit coins are getting cleared the hell out. A lot of crap has been rinsed. What have you done? You got priced to the moon that you're the new thing. What actually are your devs achieving? Where's the solution to the scalability? Where's all of these things? Anyway, I'm not the expert on the fundamental narrative. I read about it afterwards, but I do watch the charts. It tells me where it goes. So with this, you've had a major continuation pattern break to the downside. Now, if in a day's time it rallies back up, everyone will come out and, oh, boo, boo, boo. No, you can get a return move to a falling wedge. You certainly can. And you can to a downside. This ascending structure on the grind as well can get a return move to the grind, but that doesn't mean it has to, doesn't mean it will. And once it return moves, it can still roll back over and come back down a lot harder and a lot meaner. And that's the next zone of support. So there you have it. So let's just show you. We were micro. I had a bit of fun with this on Twitter because it's when you have a tough August, it's nice to get a good break. But we were watching Ethereum like the cat. If you aren't following on Twitter, you certainly can. But that was on the 5-minute chart time frame. Looking for our dinner there. And that particular chart is actually a fractal on the 5 minutes. And the guys that have been trained were spotting it and talking about it. And that, wait for it, was our grind line. That lower line here was our grind line. And it coincided with a low 3 for us on our inverted HVF. So that gave you a really, really tight entry. This would be incredible. If you work this out risk reward with a stop there and the first setup in a new trend, inverted HVF on a grind line, and you saw how far that thing has spilt. Literally, I don't even want to have a look. I think we're short at about 283 and your stop could have been at about 285. $1.50. And as we stand right now, you would have made, there we go. Why didn't we just do it there? 283.67. And that short is there. You're already through the grind line when it let go. 283.15, 283.15, 283.67. People don't understand. You can get high reward to low risk opportunities, but you've got to know when the market is low enough volatility to not run your stop out. I'm not saying I would have used the stop just there. I would have put a bit of safety net in that, but once the break occurred, I could have trailed it as just to the low 3. We don't trail stops, but I could have moved it to that low 3 once that was verified. The break was verified. So there's your break. Read it and watch it right now. Stop losses are now in. You could have started up there. You could have started up here for all intents and purposes, but you are good to go. And I think there will be more to come. So we'll probably look at overperformance. Remember, it's a small fractal pattern that is giving you an incredible 20 RRR. And that stop, as I say, the minute you got your confirmation of the break, it could be right there on the last high just before it rolled. And that gives you the better part of 100. You wouldn't put it there until the break because you can get that little bit of a flick. But that's how it could have done. So low one, let's move my face out the way. Why don't I do that? Low one, high one, low two, high two, low three. You would have probably been high three there in fairness. So that is just would just be improvising your stop even tighter. But the most of the significance of that move, you would have probably been safer to, hey, give me the other one. One of these days, I'll be able to have a mouse that clicks and takes the thing I actually wanted to take. So the stop would be there. That entry, let's grab that side. Will it come down? Doesn't want to come down. Arg. Never mind. You get what I'm saying. I think it was around 20 at the higher level. So that's the value of high reward to tight stop trading. And that's the benefit of what we got here today. So where does that leave you? Fiat is the safe haven, unfortunately, for now. The market remains precarious. You do not go from a bull market with a blow-off top immediately into returning a bull after a period of zigging and zagging. You need proper rounded bottom, and there's a lot of selling that still has to work its way out. And Ethereum, on the bigger time frame, I have serious concerns that I think this reward could get richer. Yes, a bit of rally back. There's a cyclical low here that is under threat. Maybe we get a bear flag. Maybe we get a rising wedge. Maybe we get another inverted structure setup. Who's to say? But on balance of probabilities, my bias is bearish Ethereum, bearish on Ethereum, and also largely very cautious on crypto as a whole. For now. And that hasn't really changed too strongly for quite a long time. A lot of grind lines breaking, a lot of setups for this particular chart. BTC's been a bit better. It gave a slightly better effort of trying to climb, but again, into rising wedges, big smackdown. We'll see what comes next. It'll also be a key determinant of the next roll of the dice for crypto. And you should, after a highly impulsive sell, expect a degree of rally. That doesn't mean everything is okay after that. Even if you rally right the way back up to 7,300, you might get a nice rounded top, and you will get a second smackdown, and you'll set further structure up. This level of smackdown shouldn't be happening. It's very aggressive. It shows an absence of bid, and it also shows the weakness of the buying coming in under these wedges, and then more coming in under the wedges, and then they pushed it through to that confluence of targets. And we were saying yesterday and the day before when I was talking to my guys in premium, now's not the time to be bold. Now's the time to be very defensive. Progress decay phase is now in place. You'd learn about that and 5 stages of a breakout with me on my program. The likelihood is that retraces are very, very probable, and this is exactly what's happened. So there you have it. That's your update on crypto. And for those that feel that it's relevant and can see the value in that, you can go through to themarketsniper.com and reg there. Go in, like our Facebook page, by the way, at The Market Sniper, not because it's good for me. It'll be good for you. I'll have a mini course that I'll be releasing through there that will be entirely free. But we'll only be able to identify people from those that have liked the page. So if you're on Facebook, go to That Market Sniper. Okay, that's it for crypto. Be careful out there.